Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Well, in the last recording, we talked about there might be some icebergs in the way of the market's cruise up to that 381 level on the SPY, and that was before the news of the new strain of the coronavirus from the UK hit the markets. So far, market's done a decent job of navigating around the obstacles and its melt up move to the upside. However, at some point in time, the ice gets so thick that even those icebreaker ships can't get through it. Let's take a look at the charts. If you're new to the channel, be sure to subscribe to get all the market updates before the next trading session opens. At the time of this recording, it is very late on Friday, Christmas night, which means the market will be closed for the next couple of days for the weekend. Next week starts what's commonly referred to as the Santa Claus rally, that period of time between Christmas and New Year's when the markets tends to, as we've been saying, melt up. Well, that thaw the ice, will Santa bring the warmth needed to melt the ice so that the market can melt up to that level? As you can see, we're getting awfully close now to that 381 level that we've been talking about for a very long time. Now, I'd like to call your attention to this bar here on the 21st of December. That high there is a little bit odd. I was watching the market at 1:24 Eastern Time on the 21st. There was a spike in pricing. Seemed like an aberration to me, possibly a data error, but it's been on all the exchanges, on the SPX as well. And normally when there's a data error like that, the exchanges get it corrected sooner than this. So for now, it's there and we'll go with it. Awfully close again to the 381 level. Aside from that, as you can see, the market has really done almost nothing for the past couple of weeks, just going sideways. So we'll have very low volume. The market's closed on Friday for New Year's, so it'll be a 4-day week. Is that enough to actually hit the 381 level? It's going to be really interesting to see. Taking a look at the US dollar, because it's very close to the target that we've been talking about for quite some time. This is the March contract now. That's why the data looks odd over here, because of the amount of trading, the volume that's trading. The March contract being the current one now, so the bars look a little bit cleaner. So if you're just wondering, I just wanted to point that out to you, but it's still the same data still applies. So the move to the downside here in the A, B corrective move, C extension down to 100%, right around 89, and as you can see, on the 17th, we hit a low of 89.64, so awfully close to our target low on the dollar. Wanted to update you there. Now, a couple of very interesting things to look at in interest rates. If you've ever heard me over the past several months talking about the markets, you've likely heard me say that if you want to be a successful equities trader or a successful derivatives on equities trader, you need to have at least a working understanding of the bond market. The more you know about the bond market, the better. There's a lot of money in the bond market. There's actually more money in the bond market than in the equities market. And what happens within the bond market does affect the equities market. Now take a look at these charts. Here's the TYX for the 30-year. You can see this Elliott wave corrective triangle that's forming here, meaning that interest rates are getting ready to break out. And when they do, that's going to affect the equities market. We have the same scenario in the 10-year, a bit more of an ascending triangle where the 30-year is pretty close to a symmetrical triangle, but nonetheless, both of those are showing that a breakout is likely to occur in a very short period of time with interest rates. Looking at the ADX, you see a little bit of interest here with the ADX on both the 30-year and the 10-year, meaning that maybe something behind the scenes is creeping in there and we're getting ready to see the breakout move. Looking at the VIX, it looked like back at the end of November and early December, we had mentioned how we broke below that level around 22, and at that point it looked like, okay, we're going to come down, we're going to close this gap, maybe test those lows around 15, turn right back around, and then we move to the upside here, and you can see this bar. Now this occurred, another interesting data thing, but this did occur. It just occurred pre-market. It happened about 5 a.m. before the market opens at 9:30 a.m. Eastern time, but we did actually have the VIX up that high pre-market. Now we're right back testing that 22 level again. So does this hold and volatility jumps back, or Does the Santa Claus rally in a quiet week have the VIX drop back down? Again, it's going to be a very interesting week coming up. One other thing to show you on the SPY is, as you can see with the DMI here, it's looking a bit better than it's looked in a while. The ADX is starting to move to the upside. It's about to break through 25, which a lot of people look at for the DMI. I've said in the past I like to look at 20. I think it's a touch more aggressive, but I like it. And then the two directional indicators have some separation. It wouldn't be shocking to see that positive directional indicator turn up and lead the way for a pretty decent upcoming week. See how everything plays out. Washington, with President Trump not signing the stimulus bill, which was a surprise. Is that going to affect the markets coming up? As I said, a lot of stuff to watch on what is normally a very quiet week. In the next recording, we're going to talk about the January effect, what that is, and how historically that's affected the market. Before I sign off, I'd like to wish everyone a safe and healthy holiday season. And before you go, don't forget to hit that like button, or even better yet, hit subscribe. Therefore, you'll be notified every time we post a new video. And with the January coming up that I expect to have, information is going to be crucial to have sooner rather than later. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.